Tweet coherence at all-time highs. Great win for myself. I'm glad some of you guys got in from the story, saw my conviction. I mean, I've never been so convicted on the internet before in my life. And it's one thing to be wrong on a stock, but right on the thesis. It's another thing to be right on the stock, but wrong on the thesis. I happen to be both this time. I do want to say, though, during this AI wave over the past 4 months, there's plenty of stocks that have doubled. The reason why I love my coherent call is because thesis was right, but forget the thesis. It's all about making money. I believe the risk was much lower than pretty much every other name that doubled. And that's just my investing strategy. I want to be able to underwrite the risk. And then I take leverage. Like, I'm not saying my P&L doesn't swing like a donkey, but I just want to understand the risk that I'm taking. I don't want to be caught out with my pants down on some sort of trend that I'm piling in, that's just traders, etc. But I do want to go into the next moves. I think Coherent is still drastically underowned, is a great add on any dip on its way to 500 over the next 2 to 3 years. Moving on, if you are a dollars in time type of guy, my best call of the year was actually BTU. I think that looks good and is an add and is still very cheap. The small caps, we just need a better environment. We got XNet that is trading at 1/3 book value. The major stake that they have is $1.2, $1.3 billion, is holding in perfectly. June, that becomes monetizable. And XNet threw us a bone and said, yeah, we're going to continue to improve our business, but also return money to shareholders, which a business that is growing like XNet 40, 50%, they don't want to be like, oh yeah, we're just going to do buybacks or we're going to do a special dividend. Like that's for like really value companies. And these guys as tech people with a growing business are like, we want to invest in our business. Don't tell us to give the money back. We have good opportunities within the business. But they threw us a bone because it's a balance sheet story as of now. Again, trading 1/3 book value. JFin, this is a company that does not take credit risk. People do not understand it. There's a lot of FUD out there. Right now, it is increasing earnings 45% per year. Last year, they paid $1 in dividends. So they should pay $1.45 in dividends at the same payout ratio if we're on the same path, which we have been for years. Call it $1.25. Okay, guys, 14, 15% dividend on JFin. You just got to own a Chinese small cap in order to get that. The business is great. Again, JFin, XNet, people are like, oh, Chinese small cap. The auditors are PwC for XNet and Deloitte for JFin. So just like, let's relax. You're either never going to own China or you're going to own China. If you're going to own China, I really like these stocks. Into the China thesis for the future. Baba, Baidu, JD, all of those stocks, not yet. January and February, I'm going to put on call options on those bad boys. Now, a new stock trading at a huge discount to its NAV. You have to read my Substack for this because it is so soon. I actually love this stock. I've been adding to it over the past 2 days. It trades ridiculously. It's literally been trading for 2 days. See my Substack if you want that pick. Otherwise, I think honestly of all small caps that are going to move now, besides that last one, quickly, is Rail, Freight Car America. We're going into 2026 when everyone has correctly acknowledged that in infrastructure, investing, manufacturing spend, industrial spending, industrial investment has been down. Why is that? The big, beautiful bill and tariffs. Got to figure out a lot of confusion. Next year, trade confusion goes down. Still going to exist, goes down. It's always going to exist with Trump. Big, beautiful bill is set. That means you can amortize in year one $1 million lasers, $1 million water cutters, pretty much everything that you put in a factory, including the structure. This means a massive amounts of materials. You're building out data centers? Oh, well, guess what? You need materials to go in. So I really like Rail. I think it's going to move pretty quickly. Jack. Unfortunately, this is probably where I was most off this year, and I still love this stock. I'm just too early, which I'm prone to do. Now, I think this stock is going to double minimum. You know, it's a forward PE. If you just take the 2024 and you make it 2026, forward PE of 4.5 because they improved the balance sheet. You also get 5%, over 5% in dividends paid to wait. This is a diversified business. I think we're going to see in Q4, not that bad. It's going to start to move. You will be paid to wait in that stock. You can collect the dividends. If you hold it for 12 months, you pay capital gains on a double. Everyone should be happy with that. It's also trading much better than before. I know a hedge fund personally adding to it here. Next, I mean, this is just off the top of my head, but honestly, what's been moving my portfolio so far today, I made a video a couple days ago. Guys, I think that certain names are going to rip. Guess what? I didn't buy any mega cap calls. Oh, you liked Google. Why don't you buy Google calls? I just had a feeling a lot of these things that are really beaten down over the past 45 days are going to rally. What did you see? You saw IREN, which was actually the worst performer of the week for me, but it's, I added to it, still in the money. Oracle. Everyone hates Oracle. Oh, too much debt. Guys, it's $1 trillion market cap. Like, debt to equity doesn't mean crap. Common equity is the amount of retained earnings. That's an accounting statistic. Don't give me debt to equity. How much debt do they have? How much market cap do they have? Because they can just issue shares to pay the debt, or free cash flow, some sort of liquidity metric. How much free cash flow, how much interest expense is there? So I liked writing Oracle this week. I also bought Oklo calls. I didn't tell anyone that today. Those things exploded. NBIS, I've heard people super bullish on it. I think fair value is probably like $40, $30, $50, but I'm like, that thing's gonna rip. I did buy Tesla calls today. Hopefully that shit gaps up. I would love that. Give me Tesla 475 tomorrow, please. If you don't know about Tesla Friday, it happens like every month or 2 months where Tesla just decides to go bonkers on a Friday. Hope that's tomorrow. What else? I bought Marvel calls. It just didn't hold the number. Those calls are probably dead. But anyway, I'm not even looking at my portfolio. It's off the top of my fried brain right now. Sober, just tired. Going into the end of December, you see some crypto bounce, crypto gather. You see a lot of these AI stocks that keyly are not mega caps in December. Oh, the mega caps are underperforming the rest of tech? Holy balls. It is extremely bullish for the AI trade. I'm going to be talking about more names. I want to talk about the entire TPU infrastructure on my Substack. And then I'll come back on here if I have energy and tell you guys, but go to Substack. Even if you're a free sub, you get plenty of value. I appreciate you guys. I'm talking about the markets the way I see it. It's now 7 minutes and 40 seconds. You get a cookie if you have this long of attention span on TikTok.